We have an extremely qualified panel today. So I wanted to call attention to the handouts you have on the tables there with some data that we're going to be talking about during this session. Nicole, can you set the stage for us? How will intelligent technologies impact what has been business as usual in the M&A industry?
Absolutely. Well, we see some great opportunities ahead by leveraging technology throughout the M&A lifecycle. A couple of areas in particular we'll talk about today. One of the key questions to ask, are you using artificial intelligence and machine learning in your deal cycle? So perhaps in the monitoring of your portfolio of targets, are you using AI and ML to monitor the events that are happening with your targets, or are you using human intelligence 100%? If it is the latter, that is the opportunity for you because AI and ML, these intelligent technologies, can really help you to drive up speed and accuracy throughout the cycle. And there are 4 primary areas that we see benefits in today. So Steve, I'll just share some of the major categories. Just envision with these technology platforms, the benefit over the human is that instead of having an analyst monitor your targets, you're able to use this technology to scan millions of data points out in the marketplace relative to your targets, 24 hours a day, 7 days a week. And then that technology separates the signal from the noise, presents that to you in a dashboard, so that every morning you're looking at what is most relevant to you for your acquisition targets. And a couple of examples where we see value in this. Number 1, regulatory changes. So in the past, we might have thought of new regulations as impacting the financial services industry or life sciences. But today, I'll just, by show of hands, ask you, how many of you are familiar with some of the new artificial intelligence regulations that are coming out? The new Algorithmic Accountability Act. Anybody familiar with this?
Show of hands on that.
Okay, I do see one. Very good. So this basically is getting at the fact that we know that all of our targets will be using AI and ML in the future. The question is when. And with these new regulations, that will impact the value of the targets. That could impact the risk if they're not able to implement the new requirements. So artificial intelligence regulations will impact everyone. And understanding that is really key. So rather than relying on the human intelligence, which, as you can see from the poll in the room, we're not monitoring for these areas unless it happens to hit our inbox. But the technology can monitor this for you so that the development of this bill would be served up to you in your inbox as to something that could impact your target companies. So secondly, the customer. So Steve, we know it's all about the customer. Customer centricity is really our focus today. And the technology, of course, can scan and monitor millions of data points related to the customers and what they post. We all know customers are very vocal about what they like and what they don't like. So the blogs, the social media post, rather than trying to have humans monitor that individually, use the technology to scan millions of posts and then be able to analyze that and serve up what is most relevant to you. And then compare the customer base and the customer sentiment of target A against their entire peer group and against all of your targets. The third area is with employees. In a very similar way, monitoring employee engagement is critical, and culture is really critical. Don't rely on just the human workforce to do that today. Use these technologies to scan and monitor for new developments with the employee sentiment, with the culture changes, day in and day out, so that it's served up to you when a relevant change occurs. There are many blogs out there specific to every industry where employees can anonymously post whether they're satisfied with something or whether they are unhappy. And you understanding that relative to your targets is really an option. It's really possible today. And having the ability to compare that employee satisfaction level at one target versus multiple targets is absolutely your opportunity. So we see real value with that. Jim, I think we see in our industry a couple of employee blogs that are that we monitor.
Absolutely.
So, it's available for every industry. It's highly relevant data. The same thing with culture. I think one of our teammates here talked about Glassdoor. There are many sites that monitor culture and the NPS of a company. Are their employees willing to recommend to their friends that working at the company? So don't rely on your human workforce, your analysts, to be the ones who are researching Glassdoor and heading out there before your meetings. Use the technology to scan for that 24/7. And then the fourth and the final area that I'll mention is monitoring the competitors of your targets in your portfolio. So understanding their growth rates, their profitability, much is posted about these companies today. And the power of the data and the technology is to scan across many, compare it to a peer group, so that you can understand the high outliers and the low outliers very easily without using the human workforce. Then the human workforce can do the analysis for you. So Steve, those are a couple of areas that we see where technology will really benefit us and help us drive speed and accuracy.
I just wanted to highlight, this question came up earlier about social media. Ned Beatty from Suntex says they try to monitor, what people are saying about their portfolio companies in social media. So that's, and some of the tools you're talking about, gosh, I wish I could use them for my reporting. It would be pretty interesting. So Jim, this sounds like diligence is changing in a big way overall. It's a huge equation change here.
Yeah, diligence is absolutely changing. What we're really looking at is a change in the delivery model. It used to be that, you'd have your team, you'd work through your Excel models, you'd build your data books. That would take some period of time. Today, what we're really doing is we're marrying up technology with the use of data extraction tools. We're building those data books much faster, and then we're really getting into the data analytics side. And the data analytics is going much beyond the general data visualization tools. Everybody's got access to Tableau and Power BI, and we can all make fancy presentations, but what we're really doing is evolving the diligence process to not only focus on the confirmation of historical EBITDA, plus or minus, but to really help our clients get insights on the future performance of the company or the target, and how to help drive that performance. And we're able to do this really through the use of data analytics and other technologies. And what's really beginning to happen is it's changing our delivery model. I think that there's always going to be a space to bundle innovation and the use of technology with human intelligence. And what that's going to do is it's really going to drive a better customer experience and greater customer intimacy. And that will help create better alignment with customer needs and really help drive value and move away from sort of the so-called insurance policy on EBITDA, but really become a strategic partner and help drive value. A little bit later in the presentation, we'll talk about some ways that we do that, but if I can look at the underlying investment thesis and kind of understand what the synergies are, and with the use of data analytics, improve those synergies by, pick a number, $2 million, $5 million, $10 million. We heard on earlier panels where, multiples are, 10 times. Some industries higher, some lower. If I can save a client or identify $5 million in synergies that weren't in the underlying investment thesis at a 10 times multiple, that's $50 million of enterprise value. Now, we recognize that we'll bifurcate sort of the PE community. There are those PEs that have operating partners, and we heard, some of those PEs are now bringing in functional partners. And, maybe that back-end piece is not for everyone. Certainly, we see a lot of interest from those PEs that are really just focused on the financial side of the equation. And there is real value that our corporate clients are seeing from this. So the delivery model is changing. The pyramid is getting narrower. Those lower level analytics and transactional analytics are no longer being done by people. They're being done by machines. And there's more of a focus on marrying that to human intelligence to drive a greater customer experience.
So, Nicole and Jim, you both mentioned harnessing data for this purpose. It sounds like you're throwing a lot of things out there that people haven't necessarily known a lot about, like AI, and weaving that in. Is this all going to just add more time to the due diligence process? Is it going to make the due diligence process unnecessarily complicated?
It's a great question, Steve, and I'll share a few thoughts here. I think the key is the ability to use a technology platform that will help you analyze, as I was mentioning earlier, millions of data points. Because it's good to have data and a lot of data, Steve, but you can't use that to help you make decisions if you're not able to get it analyzed efficiently. And really using a human workforce solely will not get you there, because you've got to ultimately analyze millions of data points. And really what is ideal is to have that analyzed, have the technology at a bare minimum foundation level separate the signal from the noise. So what is most relevant to you? You put that into the parameters of what the technology is monitoring for you, and then it will serve that up to you. We see that served up in a dashboard every day. And what you're focused in on is the changes that are relevant to you. So I think there's power in having data from many dimensions: employees, customers, competitors, but you've got to bring that into a tech platform to be able to analyze it for you, and then use the experts like Jim here to be able to analyze it and determine the next steps.
Yeah, and I would add that the technology actually speeds up that front end of the process, which allows you the additional time to look for those value-added insights. There's a handout, and we don't need to flip this, but there are a couple of exhibits, bars, restaurants, hotels, casinos. They are all very data-rich environments. And we took a couple of generic slides, bar staffing.
Let me just break in there. That's pages
Sure.
4 to 9 on the handout there. The bar staffing based on checks per hour. Pretty
So
interesting stuff.
when we look at bar staffing in this example, 5 checks per hour, we look at sort of the front of the house staffing models based on all the underlying data. And what we found that in this particular case on Wednesdays in April, you are almost most efficient. You've +1 front of the house staff. But when you looked at it on Fridays, for instance, you could see that there's about an 8-hour spread where you had probably 4 too many front of the house staff. It sounds trivial, but put that out over a year. Think about the head count you can save, and whether that's $500,000 or $1 million at a 10 times multiple, it's real money. You're creating enterprise value by doing this. When you go to page 4 and 5, it's really the same idea. Room service as well as restaurants. It's the same thing. When you do that over a long period of time, you're able to find opportunities to really optimize your labor pools and save a lot of money in the deal. And when you're starting to do this over multiple activities, it begins to add up to a fairly significant amount of value. If we flip to, this is kind of a really interesting one. If we flip to, well, we can talk about Exhibit 4, but I love Exhibit 5. Exhibit 4 basically says, we did a transaction with a hotel group, and they didn't have a Go Green initiative. And our research tells us that 10 to 15% of the people that check into hotels are willing to forego getting their room cleaned in exchange for rewards points or some other things, a free drink at the bar, or whatever it
That's
might.
something millennials would really probably be interested in as well.
You know, I don't actually have the breakdown demographically, but it
what
would
I've
be
heard.
really interesting.
Yeah.
Millennials are an interesting group. They're willing to pay, $5 for a Starbucks coffee, but, they don't like to spend a lot of money on a broader meal. But, here was a situation with the Go Green initiative. If you had, 10% adoption, you'd save $1 million over the period of a year. So when you're able to look into these enhanced analytics, there are opportunities to save money. Exhibit 5 is, it's a really interesting one related to casino table games. And what we did there was we went and we calculated the average theoretical win rate for the casino across numerous table games. We looked at what that translated into from or how that interplayed with comps and rebates. High rollers get rebates in casinos. That number could be up to 20%. And of course, there are comps.
So that means if they lose money, they get some of their money back?
They do, yes.
Okay. That's
yes,
not a bad
yes,
deal.
they do. And then there are also comps. And what we found was that 27 out of 118, yep. 27 out of 118 casino hosts actually were comping too much. And so they were actually below the theoretical win rate of the broader casino. And what the resulting action of that was they put in enhanced controls on the casino host, and what we saw in the subsequent months was actually an increase in profitability within the casino. So there are some of these things, again, when you begin to add them up, they become very meaningful. Now sometimes some things just sort of confirm what you may already know or what you might believe, and Exhibit 6 is an interesting one. It basically says ADW is the average daily worth of a customer. Based on the amount of discount or investment made into a particular client, it actually didn't change their playtime. So you can invest way over the theoretical win rate, for instance, and that person wasn't going to play anymore. So it really didn't make sense for those casino hosts to overcomp or over-discount losses in that situation. So these are just a number of examples where you can use data analytics in data-rich environments to really drive value in a transaction.
So you might run into some resistance, I would think, from people. Why are you telling me how to run my business? But the numbers don't lie. So once you have the numbers, you have the persuasion, I guess, right?
Well, what I would say to every client is as an advisor, we're never going to know as much about your business as you do. We're not going to. And if an advisor comes in and tells you that, they're lying. We're not going to tell you we know more about your business. Are we really knowledgeable about the businesses in general? Yes, of course. I'll tell you, when we started to go down the road with this issue around the casino host, we got huge pushback. This was a casino in Vegas. Management told us they didn't really want us to go through the exercise because they had people with 20, 25 years of experience on the Strip. They knew how to run their casinos. And we said, well, you know what we'll do? We won't even charge you on this. Let us see if we can deliver the value that we think we can. And if we can, then you can pay us. And that was really what we agreed to. And of course, when we did the analytics, the numbers don't lie. 2 + 2 = 4 every day of the week. But we were told that the numbers lied. And we went back and we explained and re-explained, and finally we got buy-in. And they said, no, you know what, this really does make sense. And it was a big win because, like I said, in subsequent months, they turned that profitability around of those table games, fairly quickly by putting in some additional controls on those hosts.
I'm Nicole Jordan. To learn how Grant Thornton can partner with you to strengthen corporate governance, leadership, diversity and culture, customer focus, and technology and innovation within your business, please subscribe to my YouTube channel. Thanks for watching.